this is a daily chart on the left, okay, so that you can see the full picture. And on the footprint, which I've got on the right here, what I'm doing is just replaying this section of price action in here, below the highs before this breakout, just so you can see what a good breakout should look like. And what you'll notice is a marked change in which price moves when it starts breaking through these highs. So just note the kind of pace of change here, relatively slow, relatively little going on. And then as it breaks these highs, what you'll see is a flurry of market buying, most of which will be the result of short stopping out. And that will be reflected in a string of zeros on the bid. So there you see a string of zeros as price breaches the 4190 level. And as I've explained, what's happening here is that as these stops get triggered, they're converted into market orders, which will kind of sweep the book, effectively eating up or consuming all of the available liquidity. And you can see that it's as these highs get breached that those stops get triggered, and you get this sudden influx of orders. So there again at 4241, you'll see that when that level breaks, you get another sudden influx of orders as traders get stopped out. And of course, at the same time, you also got traders buying what they perceive to be a breakout, looking for price to extend. Okay, and that's a lot of orders. And so when price breaks out like this, and especially when it breaks out of a consolidation, this kind of prolonged, in the absence of any significant selling, it will naturally run until it hits some liquidity. So this is what a good breakout looks like. You'll have some significant level, okay, swing high or low, top of a range, and often you'll get some kind of basing or consolidation before the level, as buyers buy limits in here, absorb any remaining sellers up at the range high or up at that swing. So then what you'll often get, what you'll always get, is the initiative in the form of aggressive market buying, followed by a low volume area, okay, an inefficient move, a weak leg in price. And you get that one as a result of the market buying, which came in on the break of this level, as well as the inevitable stop outs. So you get an LVA, a low volume area, which forms because price runs very quickly through this this area on the back of stops, aggressive buying, in other words. And as I explained in the first webinar, generally nobody's willing to provide liquidity here. It varies depending on context, but in this example, which is a good breakout, okay, a breakout which sustains itself, we don't have any significant participants willing to provide liquidity above that key level. And so what happens is the market moves out of balance because there is, in this case, lots of buying and little to no opposing order flow. And so it will, of course, run until it hits some significant liquidity, at which point what you want to see for a good breakout is a kind of shallow pullback, and for price to then carry on up. So basing, initiative, aggression, string of zeros on the bid, short stop out, and breakout buyers buy this up. What you get there is an inevitably low volume area, inefficient price run, but price carries on up until it hits some liquidity, and then you'll often get a shallow pullback, and price will push higher. So that's generally what a good breakout looks like. That's what you want to see for a breakout, which is going to kind of sustain itself. But of course, depending on context, price can just as easily poke through these highs and fail. And that's what we're going to be focusing on today. So this is quite a nice kind of visual representation of that dynamic, which I posted on Twitter a while back. There was some significant level here, right? And price appeared to break out of that level, and you can see here all this is it's a kind of visual representation of the market buying which occurred in this area. So these blue circles here, they represent market buying of a particular size, so big market buy orders, most of which are likely stops. I can't remember what the threshold was here, but I think it's something like 500k on BitMEX. So anything above 500k, or maybe it was a million, that's represented here as blue circles, and the bigger the circle, the bigger the market buy order. So most of these are likely stops, and we know that because of location. Okay, stops tend to accumulate above highs and lows, as you know. And so what you see here is the breakout rush, which you almost always get on the break of a key level. But you can see that there's very little buying interest up here, other than those big market buys, most of which are, as I've explained, more than likely stops. And you know there's no buying interest because price retraces this whole move on very little selling. Okay, there are some somewhat significant market sell orders here, but you can see compared to the run up here, really there's very little market buying in this area. So you know there's no real buying interest here, in that the extension, the move here, is more than likely just the kind of artifact of market mechanics, artifact of stop orders which take price higher than it should otherwise be trading, and then retraces this whole move on very little selling. And of course it's not literally a void here. Price retraces on very little selling because there are very few bids in that area, but you'll always get uninformed traders chasing these moves and more than willing to provide liquidity up in here. Okay, but really, in order for a breakout to be sustained, the order book has to be quickly repopulated by large or significant traders, so what some might call informed or influential participants. And you can see they're just not present here. A good breakout requires big bids propping up the market, and in combination with that, a lack of profit taking. So in this case, a lack of significant selling. But of course, if there's no real buying interest up at these levels, once short-term buyers, most of which are stops, once they dry up, price will more than likely just draw back into the relative void which this run has left in its wake. Okay, especially if prices hit some significant sell side liquidity.